I'm Eric Tyson, author of Personal Finance for Dummies and Investing for Dummies. I'm also a former financial counselor and a syndicated columnist. Pretty much everyone goes through tough times at some point in their life financially, or they're part of a general difficult environment with the economy, and it's important to keep perspective. One of the ways to do that is to look at the diet of financial advice and information you're exposing yourself to. You want to be very careful not to expose yourself to too much information, especially if it's conflicting or it's causing you to be ridden with anxiety or stress, and you should look at that. There are a number of useful measures for your financial health. You know, one thing I think is really important for people to look at is the level of consumer debt, for example, on credit cards and auto loans that they have relative to their income. Ideally, that should be zero, but if it gets up to be more than, say, 20 or 25%, that's a significant cause for concern. To secure your financial future, several things you should think about doing. First, you need to live within your means. In other words, spend less than you earn. Secondly, direct that savings into retirement accounts so that you get tax benefits from doing that. Types of accounts we're talking about here are like 401k plans, 403b plans. If you're self-employed, it might be a KEO plan. Retirement accounts are still a terrific vehicle to take advantage of, and I think they're kind of misnamed. If they were called tax reduction accounts, which is what they really are, more people, especially younger people, would be attracted to take advantage of them. For every $1,000 that you put into a retirement account, you may get, say, $350 in federal and state income tax breaks. Everyone gets the federal tax break, and in most states, you can take a state tax break as well. And once the money's in the account, in addition to those upfront tax breaks, the money can compound and grow over time without taxation. And finally, make sure that you have proper insurance coverage. If anyone's dependent on your income, you need to have life insurance. You want to have long-term disability coverage, and you also want to have proper coverage of your assets, whether it's your home or car and things like that. You know, psychologically, it's difficult for people to stick with an investment after it's declined in value. And during the 2000s, we've had two brutal bear markets in the stock market, bear markets where the market's broad market averages have fallen more than 40%. The worst thing that you can do in an environment like that are to sell the stocks that you own after they've already collapsed and dropped significantly in value, because then you're not going to participate in the inevitable rebound that will eventually happen. If you're finding it difficult to stick to your stock market investments, one simple thing to do are to go into so-called value mutual funds, value stock funds. These are funds that invest in the safest and most conservative stocks that tend to pay good dividends, invest in companies that tend to not be as cyclical, companies that do well during good times as well as bad. So psychologically, that enables you to stay with your stock market investments. That might be a vehicle to check out. A number of different ways to reduce your taxes. You know, the first thing, every year you do your tax return, don't stick it into a file folder after April 15th. Actually get it out, take a look at it, because that can provide a lot of clues for how you can reduce your taxes in the year ahead. Health savings accounts are a vehicle that a lot of people should consider. If you have a high deductible health plan, money that goes into the HSA can be deductible on both your federal and, in most cases, your state tax returns. Even if you're looking at spending that money immediately on healthcare expenses, if you pass it through the HSA, you get the tax break. And finally, look at buying a home. Homes have always been a terrific tax shelter, and with prices depressed in many communities after the real estate market slide in the late 2000s, you can get much better buys than what we've seen in quite some time.